we just heard about how China's reopening has given somewhat of a boost to the stock market there, but there are concerns remaining about economic growth going forward. But some of that optimism, hopefully, will also spill over into the real estate sector in the region, particularly after a 25% drop in investments last year. That's according to the property consultancy firm JLL. And Roddy Allan joins us now for more. Roddy, great to get you on the program. A very good morning to you. We were just talking to Alicia there about growth forecasts for China, and while they are better than perhaps before the reopening, there's still a rocky road ahead. What's your sense for the property sector?
I think for the property sector, the main focus, if you look at everything the government is now doing, it's highly focused on economic growth, and I think that only bodes well for the property sector. The opening up and the fact that, to be honest, that major investors internationally have not been able to sort of go into the market with any sort of freedom, that's going to change, and international investors will be able to go in there. Now, I think the other thing we've got to bear in mind is, if we look at it from an international investor's perspective, China certainly has some challenges in the property sort of sector at the moment, that we've all seen. At the same time, that creates opportunity for these international investors to get in there. But I think if we look at it over the medium to long term, opening up can only bode well. If you look at it for the retail sector, opening up of markets, yes, it will be challenging, maybe a bumpy road for China, because obviously we may have outbreaks of COVID, and that may challenge of retail spending. But ultimately, we're going to see the same kind of revenge spending that we've seen in every other market in China.
Are you expecting government support in the property sector to help boost it?
I do think it will be, it will be very orderly. So I think everything the government does will be around ultimately the policy of ensuring, houses for people to live in, not for speculative purposes. At the same time, China understands that the property market is so fundamental to part of its economic growth. I don't think the sort of government support will be unsupportive. At the same time, it will go back to that basic fundamental of houses for people to live in.
And broadly, in terms of the wider impact on property in the region, what kind of impact are you seeing there?
If you mean the prospect of China opening up, I can only see it as being a good thing. Now, there's a lot of pent-up demand there for China. At the same time, if we look at it over a sort of short term, medium term, longer term, short term, we will continue to see that flight to safety that we've seen in any market cycle where there's trouble, which is basically Australia, Singapore, also Japan. Japan is specifically because the currency is depreciated, but also Japan is always there. And now, one thing that we're seeing coming very much out of our investor survey that we're about to publish is China is very much on investors' radars. And they've been waiting to see what's going to happen with COVID. And now that we've got some degree of a sort of certainty there, I think we'll see some stronger moves from investors when it comes to the China market.
Roddy Allan there from JLL. Thanks so much for joining us on that story. And as you heard there, lots of optimism about the opening up of China, what that means for the property market and the economy, but still a bit of a bumpy road ahead.